She's got the clicker. Excellent. All right, welcome. I know I'm standing between you and lunch, so we'll try to get through this as quickly as possible. So I thought I would do is spend a few minutes just talking about payments in general and the economy and what's going on relative to the trends in the industry. Now, you heard from the previous panel here in terms of faster, that's really kind of the name of the game. I'll spend a few minutes on the trends, and then I'm welcome questions, and I'm happy to take questions at any time throughout the session. So if you have a question, you can shoot it up at any time. So let's talk about how I view the economy and what I call the three I's of the economy, because it's really important with how and why payments are changing the landscape in today's environment. So the first part of the three I's is the immediacy of payments, and of the economy. So if you just think about in today's environment, when you order your coffee on your phone, you get an immediate feedback as to when the coffee is going to be ready, whether it be Costa Coffee, whether it be Starbucks, Dunkin's, whatever your choice is, you're getting that immediate feedback. So that immediate feedback process, if you think about social media and how we're training people from a Pavlov's dog's perspective of getting immediate feedback on everything that's going on, that's translating now into commerce in terms of getting immediate feedback. You get the picture of your package delivered to your front door from Amazon now, or FedEx or whatever, right? So that immediacy is really important. Now, the second part of that three I's of the economy is an integrated experience. So let me take you back to COVID, and you were ordering your pizza. The pizza company didn't make the GPS in the sky, they didn't make the map, they didn't make the little car icon that's driving the pizza to your house. But you could order that pizza, you could see it being made, and you could watch it being delivered to your house. You get your pants on time to answer the door to get your pizza, right? And the payment happened behind the scenes. But from a consumer perspective, you expected that immediacy and that integrated experience. If you think back to the ports and all the stuff that we learned during COVID with things being backed up in a port, who ships now without a GPS device being on a cargo container? Basically no one, right? Like everybody wants to know where everything is. And if you think about like the consumer experiences I'm talking about, the same thing is occurring in the B2B space, right? The need for information, the need for an integrated buying and selling experience between trading partners is no different than a consumer who's interacting with any business. So that brings me to the third I, which is it's being interrupted. And the economy is being interrupted on multiple levels because of the first two I's. So if you just think about if you're Marriott or Hyatt, you thought you were competing with Hilton maybe, right? But now you're competing with somebody who's put a flat or a house or whatever on a website, right? On an Airbnb or VRBO, et cetera. If you're a Ford or Chevy dealership, you thought maybe you were competing with Mazda or Toyota down the road, you now might be competing with Carvana. So there's all kinds of aspects of delivering much more better product and capability, and the way in which you're going to select to do business as a business person to another business person or as a consumer is all driven through that experience. And that experience, in essence, nowadays, the payment's kind of happening behind the scenes, right? You order your Uber and the payment happens. And then in the business context, you probably have it set up so that Uber receipt goes to your expense management system, right? And so if you just think about, it's really easy a lot of times to just focus on the consumer examples, but the business examples are occurring as well and is creeping into the way in which business-to-business transactions occur. If you think about today's economy with work today, get paid today, how many people do work today, get paid today, and then there's a stack of checks in a manager's office to write checks at the end of the shift. Not happening, right? It's gotta, if you work today, get paid today, you have some form of electronic payment, real-time payment, push to debit, etc. So the headlines continue to captivate, the way in which the velocity of payments, whether it be fintechs, taking friction out, unlocking value, etc. And if you hear some of the multiple of the sessions that I heard this morning, whether it be AI or other things, the speed in which payments are going to occur, the speed in which fraud potentially can occur, the speed in which we're going to have to detect things is going to continue to be a challenge. Now, no discussion in terms of trends would be complete without touching a little bit about the cryptocurrency markets, right? And if we brought Sam Bankman-Fried up here or somebody and asked them, they would talk about, hey, crypto is going to be the democratization of payments, and it's going to take friction out of the payment landscape, and it's going to open up more availability for people to transact and to take down barriers for cross-border payments. So I just have a couple thoughts that I need to leave with you relative to how you need to think about crypto and how it will or will not be a trend. Let's start with the underlying technology. Underlying technology is great. Everybody should love it. The way, if you think about, let me just bring you to your personal life or at work, you're doing something in Excel, you update a cell, and you save it on your hard drive. If you didn't rename the file, whatever the previous version was, it's not there, right? So that's, if you're working in a Word document, you type something, you adjust it, you just save it as is. There's no record of it. The difference in blockchain is you write something, you decide something happens, there's another entry, and it's just keeping a running log of everything that's going on. So just think of blockchain in that way and the underlying technology. Who wouldn't want to keep a running tab of everything that was going on with the particular transactions? Great way to think about it. Who in this room wouldn't want programmable currency, right? Conditions occur, money moves, right? Like there's this whole concept in cryptocurrency and blockchain of a smart contract. So, think about the old days in banking. We had a trade letter of credit. What did a trade letter of credit do? It told a couple financial institutions to keep track, were the goods ordered? Did they get to the dock? Did they clear customs? Did they get shipped? Did they get delivered to the, and after the banks check all that stuff, then money moves, right? Smart contract is just a digital way of a trade letter of credit, for example. I'm just trying to use practical examples to take away the mystery that people like to talk about with crypto and to make it more complex than what it is. Now let's go to, is crypto going to displace the central banks and currencies and take, supplant dollars or sterling or renminbi, etc. What you have to believe at the end of the day is that if this is going to supplant the way in which money moves, you have to believe these couple of things. You have to believe that the central banks, pick the Bank of England, Bank of Japan, the PBOC or Federal Reserve, pick whoever, they'd have to say, hey, we don't really care about money supply, right? We're out. Let the kids in the basement, Dogecoin, I think I heard earlier today, we'll let the kids in the basement decide how much money supply is available. I don't know if you're watching financial markets or you're watching the economies today, but I think almost every central bank's trying to manage interest rates right at the moment, right? So, and who probably controls the economies more in countries than the central bank? It's really the central bank. Like, yes, do countries pass laws and try to stimulate things or whatever, but at the end of the day, probably in most countries, the part of the government that has the most firm hand on the tiller in terms of what's going on in the economy is actually the central bank. So you'd have to say the central banks are also giving up on this thing called interest rates, right? Then you'd have to then also say, who are the biggest snitches in the world? It's the banks telling the governments what's going on in people's accounts and nefarious money movements and trends. So you'd have to say, okay, the governments are giving up on those things. So in order for cryptocurrencies and everything to supplant fiat currencies and the way in which economies operate, you'd have to subscribe to the notion that these central banks are throwing in the towel on monetary policy, interest rates, surveillance of the economy. Now, I say all that in the context of this is great stuff. It's actually going to be used. There's reasons to use cryptocurrency in certain cases, but in terms of supplanting and being the whole new way in which commerce is going to occur cross-border, we're probably a long way away from that over the short run. So let's talk about what's driving a lot of these trends, whether it be crypto, whether it be faster payments, et cetera, is consumer preferences. Consumer preferences are really driving towards a very richer experience in which they expect transactions to occur and they expect a lot less friction. Now, I say that, and you heard request for payment up here earlier. Request for payment actually injects friction into the environment, but the irony is that consumers actually like some friction in certain cases. So just because there's friction, it doesn't mean that it's a bad thing. Digital identity is continuing to be the cornerstone to preventing fraud, but also in how a consumer wants to interact and transact, and will continue to be a critical component of any faster payment schema going forward. In terms of innovation, it's going to continue to outpace regulation, right? And I hate to use a morbid example. We obviously just had that guy accidentally die in Russia yesterday that tried the coup. I don't think that was an accident. But anyways, so when we have a plane crash, that usually has some regulatory impact in terms of safety, right? And the same thing is true kind of in banking. There's usually some sort of crisis occurs or something, we have PCI now or whatever because of fraud events or whatever. Just think of the regulation changes that occur. The SVB market dislocation earlier in the year is going to probably change capital requirements for financial institutions, for example, right? So as innovation occurs in the payment space and as things kind of go wrong, then regulation is going to be injected into the process, and we're all going to have to be cognizant of that as the trends, and we're going to have to adapt to it. The new faster real-time payment rails, whether it be FedNow, whether it be RTP, right? I'm sure there's some criminal enterprise today trying to figure out how they're going to take advantage of that network, and at some point there's going to have to be changes, just like there's changes all the time in card, changes all the time in ACH, wire, et cetera. So let's talk about the rise of digitization since COVID, because I think we're kind of in. I was with somebody not too long ago, and they were referring to times as BC, and that they meant before COVID. So this would be, after COVID. But there's been a huge change in the way companies are operating and how their businesses are changing the way they're making payments. So there's been a 26% increase in electronic invoicing. Now, some people, I challenge this a little bit because I think some people think sending a PDF of an invoice is electronic invoicing, right? It's not electronic invoicing, right? But you can see that there's been really a lot of change in terms of 7% using digital services in a B2B context, right? And if you look at stats in terms of businesses ordering things online, fulfilling things online, delivering handheld devices, whether it be on delivery trucks, not meaning your UPS driver, but like, somebody delivering the Frito-Lays to a bodega, for example, right? 76% of companies say they've become more digital. And that's, once again, they're thinking about their client experience and their business experience. If you're a real estate company, if you're whatever industry you're in, pharmaceuticals, et cetera, they're all looking at ways of becoming more digital and delivering that digital experience, which then is really turning into the need for an electronic payment, right? So if you've automated all kinds of other things, and then you get to the tail end and it's still a check, right? It's not, it's not really electronic all the way through. And that's why you see the adoption of much more richer payment trends and faster payment trends. If you go back to my 3 eyes of the economy, and the payments are going to now continue to be more automated at the back end. So the key 3 big trends that are going on today is obviously real-time payments, and whether it be alias-based, ABA account number-based, it's going to continue to take off. And you can look at all kinds of other jurisdictions around the world and the speed in which people are adopting real-time payments. There's countries who are skipping over batch ACH and going straight to real-time payments, just like they skipped the landline and went straight to the cell phone, right? So you're going to continue to see that trend. Cryptocurrency is here to stay. You can see people experimenting with it. People are going to continue to try to figure out how to use the technology. But I'm not even sure if we're suited up yet for the game in cryptocurrency. And I don't mean us in this room, just in general, right? It's really early in the innings, just like the rage with ChatGPT or other AI, although it is kind of funny to hear that people are trying to go back to oral exams because everybody's cheating on their tests now. And then you've got digital wallets, right? So digital wallets in terms of, if you think back once again to your phone, and probably you're using a digital wallet of some type with some form of commerce today, that's going to continue to take off. It's going to continue to be a mechanism in which value is going to transfer. So I'll wrap up with, hey, where are we with the evolution of RTP in the States? We've obviously had things all the way back to 2015 to now. You heard earlier today in terms of, pitching versus catching. Completely agree with those comments. We got a lot of progress. We've come really far, and the last couple miles are going to be really hard. So I don't envy the Fed for the position that they're in with all the folks that they've got to get connected. It's a ton of work. But when you sit there and say, hey, for an economy our size, for economic conditions of our size, we've come a really far way with faster payments. And I think the way in which businesses are now starting to think about transitioning to faster payments is really important. Let me just give you some real-life practical examples of how people are thinking about things differently. Think about a company that has trucks out, and they happen to be in somebody's neighborhood, and they run over a mailbox. Now, they're going to probably pay $50 to have that. I'm just making a number up, but they're going to pay $50 to resolve that mailbox being run over. Now, almost every company has to write a check for that because they might not have a relationship with that consumer, or they might not have a mechanism in which to pay it. Now, if you're that entity that has to pay that $50, what process sounds better? Hey, Mr. or Mrs. Customer, or whatever the individual is on the other end, can I just text you $50 and you can just wait 1 second, and I'm gonna give you $50, and then the phone dings, and then you've de-escalated the situation with the customer and you're done? Or is it, hey, I'm gonna mail you a check, and it'll get there in 10 to 14 days, right? And we'll be good to go. Well, guess what? Does that check arrive exactly as expected? Does the consumer get frustrated because they actually want to get their mailbox replaced, and so then now they call back in? All of those things will be very different in a faster real-time payments environment. So with that, I'll just say, hey, as we move to an integrated, immediate, and interrupted economy, the speed in which payments need to occur are critical to the success of the underlying economy and the success of any business in the U.S. trying to take their business to a new level, because client experience is what's going to drive whether or not customers and clients are actually having an effective interaction with that business. So with that, I'll take any questions, and I got like 30 seconds left for a question, and then it's lunch. No questions? Yes?
We've talked a lot about FedNow, but there's obviously the clearinghouse's RTP out there as well, which I think we have an ownership stake in, actually.
Yep.
How do you see those two kind of coexisting? Obviously, they're not truly interoperable, but you're going to have to be able to deal with them.
Correct. So I think there's a really easy but complex answer. We actually have two high-value payment systems today in the U.S. We have CHIPS and we have FedWire. We have two ACH systems, right? We have different ways in which you can clear checks. They all don't need to interoperate necessarily, because we don't have everything interoperating today in certain aspects. So I think back to the point that was made earlier, there's many banks that'll be connected to both networks. That'll probably take the friction out of most of the environment relative to being able to clear in both places. We have a long history in this country of having both private sector and public sector solutions for moving payments, and I think we'll just continue to operate in that environment, and most corporate customers and consumers won't even know the difference. Perfect. Thanks, everybody. Enjoy lunch.